Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the stock play of the day. Today's stock is Tesla. We'll discuss should we pass or should we play? Hello, my name is Brian Overby. I'm the senior options analyst with Ally Invest.
And I'm Lindsay Bell, Chief Investment Strategist with Ally Invest.
Well, a lot of news over the weekend, Lindsay, going into this holiday. Here's a chart of the S&P 500 index. What do you see going on this week?
Yeah, this morning was a rough morning. The futures were down on the back of some COVID news out of the UK. Apparently, a new strand has been found and it's spreading much more rapidly. So it's leading to travel lockdowns in the UK and across Europe and some other countries. They're not letting folks in the UK travel. So of course, what's under pressure? The travel stocks. So we see a lot of the airlines under pressure, a lot of the cruise lines under pressure today. So if you're looking at the chart here of the S&P 500 over on the right-hand side, while the S&P 500 has come back from the lows of the morning, it's hanging around the 20-day there, but still ways away from that red line that we drew, taking us back to that September 2nd high in the marketplace, which is about 35.90. We still remain a ways away from that, as well as the 50-day moving average. So that's a positive sign. My take on this news over the weekend that we're reacting to today, it's really actually the COVID news is what investors are really focused on today. Instead of that instead of the stimulus package that we got from the government after several months of back and forth, it was nice to see them come to an agreement last night. They're expected to vote on it and pass it today. They did pass a one-day funding bill just in case things don't get done. But overall, it's a $900 billion package. It's going to really focus on helping the consumer, extending unemployment benefits by 11 weeks, adding an extra $300 per week to those benefits, and a $600 stimulus checks will be going out as soon as next week, says Treasury Secretary Steven Mnuchin. So things are moving in the right direction finally with the fiscal stimulus. And I think when you look around the world, even though this new strand of coronavirus is certainly scary and there's additional lockdowns being put into place, which means the economic outlook or the economic recovery could slow across the globe, there still is strong desire by central banks to really back up these economies through accommodative policy. So I think by the end of the day, you might see cooler heads prevail. We might get closer to flatline at the close, but we do only have 2 more weeks left in the year. By the way, this is our last stock play of the day for the year. We won't be here next week, but Brian wore his Christmas sweater for you today to help celebrate the holidays. So we're going into the end of the year. And I think, Brian, some investors are using this opportunity in the market. The S&P is up 15% today, year to date. Who would have thought that in a year like this, where we got hit by a major pandemic, something none of us ever expected to live through in our lifetime, we're seeing the market, while it plunged significantly early in the year from February to March 23rd, we've had a very impressive rebound, partially driven by liquidity from the Fed and also stimulus from the government. Who would have thought that the market be up 15% going into this week? So some investors may be taking profits here. And that's why we're actually going to take a look at Tesla. It's an interesting story being added to the S&P 500 last week. But the VIX today, though, Brian, shows investors are still nervous, getting maybe a little more nervous in the last 2 weeks. So it's not just ho-hum profit taking, end of year booking profits, I don't think. What do you think when you see the VIX? You're on mute, Brian.
I think basically the VIX is kind of laughing at us today, saying, ha ha, we were right. That's why we stayed as elevated as we have. So overall, we see the VIX at this higher level. And yes, I am wearing my Christmas sweater. We need some cheery stuff today with such a big down market. But the VIX is not being cheerful at all. The VIX is up 4 points today, trading at that 25 level. It seems like that's like the nice neighborhood. That's where the VIX likes to hang out recently. But more importantly, looking out into the futures, 28 going all the way out, 27.12 going all the way out to March. In January, we see it around 26.45. So going out further in time, we're actually seeing the VIX more elevated. And once again, I have my VIX chart up, and I always like to just highlight this 20 level. We talked, would have been really good to see the VIX get below 20 while we were having the rallies. It would have shown a little bit more conviction in the move to the upside. But as we see what the VIX is really telling us going forward, going into this new year, there's a lot of nervousness. There's still a lot of stuff out there that could happen based off of the coronavirus. At least we got the stimulus package, but that got trumped by the actual news about the coronavirus and what's going on over in Europe and the new strain that could be happening. So we're actually seeing a down day today. But as you mentioned, Tesla, we're looking at Tesla. Tesla is down about 5% today, just got into the S&P 500 index, has had a massive run. So let's look at that chart and talk a little bit about Tesla. Then we'll look at an option strategy here.
All right. Yep. Here we go. This is the chart of Tesla. Before I dive into it, though, let me just remind our viewers that we do take your questions at the end of the show live right here. So be sure to type them in the chat box over there on the right-hand side of the YouTube channel, and we'll get to as many as we can at the end. So back to Tesla, we thought it would be a great time to take a look at the chart. Tesla was added to the S&P 500 at the close on Friday and began trading in the index today. It's the fifth largest stock in the S&P 500. It was the largest addition by market cap to the S&P 500 in its history. So not only Tesla making history by joining the S&P 500, but also the S&P 500 making a little bit of its own history there too. It's going to account for about 1.7% of the market cap of the S&P 500. People were worried about the volatility that it's going to add to the index. If you just look at daily moves in 2020, this is a stock. I mean, you're looking at the chart here. Look at the big bars that you're seeing. Those are big daily moves throughout, at least the second half of the year. So on average, this stock has moved 4.1% on a daily basis this year. Isn't that crazy? The S&P 500, on the other hand, has moved 1.4% on a daily basis in 2020, which is a lot for the S&P 500 too. You don't usually see moves over 1 percentage point on a daily basis from the S&P 500. It's usually a red signal to us, like what's going on. Pay attention here. But we're talking about Tesla today. It is in the index. The stock, like I said, having a banner year, up almost 730% going into Friday's close. It's coming under pressure today. Now, we wrote an article last week on our community hub. If you haven't gone there, it's ally.com/do-it-right. All of the articles that myself and sometimes Brian writes are on there. So you should check it out for sure, plugging our blogs there. But we wrote about Tesla last week. And, the concern was that, okay, it's up now 730% this year. It popped, 8% the day after S&P announced they were adding it to the index. It popped another 57% from there into the close on Friday. So it's been, all you can do is look at that line on the right-hand side there. It's practically a vertical line straight up. So this stock has really had an impressive run, especially more recently since the announcement. And with that, when you see a run like that, any stock over any period of time, you kind of, for me as a fundamental investor, I usually want to, step back and reevaluate the fundamental situation. Of course, the market bulls are still very bullish on the stock. Some of them saying that, this is a stock that was really underappreciated for years before, say 2019 began, when we started seeing these big runs. And that's because the electrical vehicle market is popping and expected to grow exponentially over the next 5-10 years. And right now, if you look at it, about 3% of cars on the road are electric vehicles. And the expectation is some analysts have estimates number is going to reach 30% within 5 years. So that's huge growth within only 5 years. Of course, there's plenty of competition in the electrical vehicle space. Brian and I from time to time chat about NIO and the other ones that are pretty popular on our trading platform with some of you guys. So there is competition out there, but Tesla has the largest market share so far. I think a lot of people expect Tesla to remain in the lead for the foreseeable future. Yet you do have, if you look at Wall Street analysts, the majority of them are neutral to pessimistic on the stock. So about 70% of them have either a buy rating, 32% have a buy rating, the remainder, 38%, have a hold rating on the stock. Now, to get in the S&P 500, you have to have 4 consecutive quarters of profitability. Tesla just finished its 5th quarter of profitability and is already being added to the index. There's still, they've made huge strides in the electrical vehicle market. Elon Musk, people revere him as a CEO. That's part of why this stock has what's known as a cult-like following. But they still produce significantly less cars than GM and Ford. Some people say GM's producing more electric vehicles in China, which is a huge market for electric vehicles, many more than Tesla. So they have room to catch up there. And the concern is maybe GM continues to maintain the market share in the China market. But so there's a lot of moving parts. There's some pros, there's some cons. But on the con side too, the other thing is these guys, Tesla keeps tapping the equity markets to fund operations. And so you have to keep that in mind too when you're thinking about what the future of this stock is going to look like from a fundamental perspective. So a lot to think about, but the reason we wanted to talk about it, and Brian's going to look at a short-term trade, is because since it's been added to the S&P 500, if I go back at history and look at when other companies have been added to the S&P 500, historically what you see is once these securities enter the index, in the year that follows, they typically underperform the index overall. So given the run that Tesla's had, given the valuation, given some of the fundamental concerns, at least in the near term, there is possibility that there could be some pressure on the stock over the next couple weeks, maybe couple months, potentially the following year. No one can say for certain, but based on what we're seeing, we're preparing for some very near-term pressure like you're seeing today. It can potentially continue. So Brian, what type of trade are you looking at in Tesla, given what we know?
Well, obviously there's volatility in Tesla, which you highlighted. From just looking at the chart, there's volatility, but there's a lot of nervousness about the underlying stock. Fundamentally, it is definitely not as sound as a lot of the other stocks that are in the S&P 500 index. So we have to sell some premium here. There's no way that we can just buy options outright. As a matter of fact, if we go back and actually look at the VIX dashboard, the options in the VIX index, the options that actually track the VIX VIX index, trade at lower implied volatilities than Tesla, just to make a point. So to say that the options in Tesla have a lot of juice in them would be kind of understating it overall. So what are we going to be doing? We're going to be bearish, and it's also important because there's so much time value that we pick our expiration wisely. So we're going to go out about 10 days, and here's the trade that we're going to be doing inside the Ally Invest Options playbook here. We were going to be buying strike B and selling strike A. So we're going to be paying a lot for strike B, even on a 10-day option contract. And that's going to be a little bit in the money. And then we're going to go a little bit out of the money, and we're going to sell something with a target of about 40 points lower from where the underlying stock is trading right now, which obviously on Tesla overall, 40 points isn't really much of a move relative to the underlying stock and the moves that it's made recently after we've heard the news about it going into the S&P 500 index. So here's our Ally Invest option chains. What we see right now in Tesla is that it's now already down about 5%. So that's about a 36-point move in the underlying. These are the expirations that we have available. We're not worried about earnings or anything happening. That's going to be out into the new year. So no concerns there. But we're going to look out to the December 31st expiration, which is 10 days away. And just to note, if we look at an at-the-money option contract, so on the right-hand side are the puts, on the left-hand side are the calls. We have the stock at 657. So if we look at the 655, you see that with 10 days remaining, that the most at-the-money option contract is still trading for $28. That's just a lot of premium. So as I said, we're going to go a little bit in the money. We're going to be buying the 680, and we're going to straddle the stock here. And our goal by straddling the stock is to take as much time premium out of this spread as we possibly can. It's going to be a little bit of an expensive trade overall relative to a lot of them that we talk about here on the stock play of the day. But what we're going to be doing is trying to buy approximately the same amount of time premium as we are selling. So in this instance, the market's moved a little bit. So we're actually going to be selling a little bit more than we're buying. So here's the quick and dirty way to look at time premium. If I look at the strike that we're going to be buying, and I'm going to highlight it here by using our check boxes over on the right-hand side. If I click once, it puts a buy in there. If I click twice, it puts a sell in there. And we're going to be buying the 680 strike put. And if I just look at the call, that gives me an idea about how much time premium there is in that put option that we're buying. We have a lot of intrinsic value and a little bit of time value. And we look at that, we'll just look at the ask, and that's $18.70. So we're going to go down and we're going to sell one that's going to have approximately that amount of time premium. So in this instance, I was actually thinking about that 640, but I'm going to switch it up a little bit. Market moves since I started looking at the trade. As we said, Tesla moves. And I'm going to sell, let's go to the 630. Yeah, I like that one a little bit better. That's 1835, and this is 1855. We're just looking at the ask. So we're selling just about the same amount of time premium as we're buying. What does that mean? That means that if we are doing this trade based off of that amount of time premium, we're basically going to make the trade just all about Tesla. Because in the options trading world, they don't trade like the stock. They have this little thing called time value. And the beautiful thing about a long spread is that we can control the amount of time premium exposure that we have from the trade. If we go out of the money and we start here and we buy the 655 and we sell the out of the money option contract, we're paying a lot of time premium, right? That's the at the money option contract, and we're selling a little bit of time premium. So by going a little bit deeper into money, paying a little bit more, we make this all about the move in Tesla. So as I said, when you're dealing with such a high implied volatility on the shorter term options and on Tesla in general, when you have that situation, you got to really think about your expiration and what strikes you are choosing. Now, we're going to do a 10-day to expiration because if we're correct on our forecast, and let's see here, let's just look at the net price of this. But if we're correct on our forecast, we need that short option contract to decay. And we see it's an $18 option. So there's a lot of time premium in it, even with 10 days remaining. So in this instance, we widened it a little bit. We're going to go 50 points wide. So the maximum this could trade for is $50. And we're going to pay $23.83. That would be $2,388 plus commission to put on that trade. So that's nothing to sneeze at. And that's mainly because it's such an expensive underlying, but then obviously we throw in the volatility once again. So we have almost a 50-50 trade here, right? We're going to risk 2388 to make about 26 approximately. Not do the math real quickly. So it could be worth 50 at expiration if we're correct, but downside if we're incorrect and the market goes against us and it finishes above the 2680 level, the maximum we can lose is the 2380 or what we paid for it, $2,388. So let's make this the official paper trade. And as always here on the stock play of the day, we call it a paper trade because it's not meant to be a recommendation. We're just trying to learn here. We look at different situations inside the pricing of the option contract to try to come up with strategies so that you can apply it to the underlyings you'd like to trade these trades on. All right, so we're buying the December 31st expiration 680 put, at the same time selling that same expiration 630 put. Now it's a net debit at the midpoint. No, still around there. It's actually gone down a little bit. We'll keep it right there. That'll make it easy to say. 2333. So $2,333 is what the cost of this trade would be. That's going to be your maximum risk. It's worth 50 if it goes all the way down and finishes below. We'd like it to go closer to the expiration date. We need that time premium to erode on that option that we sold, and that was an expensive option contract. So if we look at the profit and loss calculator, we see here that we have the gray line representing the stock, and that's basically where the stock is at. This is the red line. As of right now, that colored line is representing the stock and the option strategy as of today. The dotted line would be at expiration. So if we're correct in our forecast, we'd like it to be closer to the expiration date. So let's move it. Let's go all the way down, put it at 0 days. And now you see the colored line kind of morph towards that dotted line, which is the expiration date. Now, obviously, if you're wrong or incorrect in your forecast on this, and we go back to the way it was, well, it also helps us too. So if it goes against us and it gets to that 680 level and it does it in a hurry, you would just close out the trade. You would just move on. It's that simple. Why? Because you want to capture as much time premium in the one that you own. You don't want that time decay to go against you. All right. Okay, Lindsay. Well, quick summary of a long put spread, but you've got to be selling some premium if you're going to be trading this underlying. But let's get to the questions. And if you have any questions, please put them in the chat box. This is a live show here on the Stock Play of the Day, and it's always live every Monday at noon Eastern time. So we would like to address any of the questions or concerns that you may have. Just let us know. Lindsay, anything we got in there? Anything fun?
Yeah, we got
anything
a couple
festive
questions.
for our
Brian,
Christmas holidays?
you didn't send me the memo that I was supposed to wear a Christmas sweater or holiday sweater today.
It was on the top of my suitcase while I was traveling with the relatives. So yeah, I didn't have enough time to get the memo out. I apologize.
Well, it looks awesome, and it's fitting because it is our last show of the year, and this week is Christmas. We only have 2 weeks left. Can you believe it? We do have a couple questions though. First up, Mike 196 says, have you looked at Fubo? Fubo lately had an exponential boom. I just took a really quick look at it. Brian was walking you guys through the trade. It's up like more than 60% since December 15th. There was, I guess it was, who was it? Cowan came out, and no, Wedbush came out and initiated the stock with an outperform on December 16th. And then today, I think it's popping again because Axios had an interview with the CEO where he said, you know, they would consider exclusive sports viewing rights or sports, what's it called? Sports, consider exclusive options with sports leagues to show their games on Fubo TV. And so that doesn't mean they actually have any contracts in place. So I'd be a little bit careful if you were in the stock at $10 and you're in it today. You know, I think it's a good time to assess where you think the fundamentals of the company are going and what your financial goals are, and if it makes sense to continue to ride it out or potentially take some profits. So I'll just leave it at that. I'm not as familiar though with the stock and not an expert on it. So I'm going to quantify it like that. Wayne, Merry Christmas to you. He says, Merry Christmas to you and I, Brian. Lindsay, going forward, what's your assumption on the XHB, the home builders ETF? It's up 12% over the last month and a half. Well, this week is going to be very interesting, Wayne, because we get existing home sales and new home sales, and we get Michigan consumer sentiment, and we get spending. So despite it being a holiday week, there's a lot of important data points, economic data points that are coming out. So the home builders will be one to watch. They've had a phenomenal year this year. Who would have thought that the home builders would be one of the better performing sectors during the depths of the pandemic, actually? But it's all been fueled by low interest rates, people refinancing their mortgages, and then also buying homes to get out of the suburbs. So, you know, you're asking me what is my outlook for the home builders? I still feel pretty positive about the housing market, especially now that the government has stepped in to give consumers more fiscal stimulus. But I will say this ETF has had an very, very impressive run here. But the demographics of the housing market are really good. Millennials coming of age, starting families, all that good stuff. So, I tend to still like them, but there's again, just like Fubo TV, you kind of need to think about what you think the fundamentals are going to be for the housing market going forward, what your financial goals are, and make that decision if you stick it out, buy in, or take profits. Sorry, can't have a more definitive answer for you than that. Finally, Scott, I keep waiting for a big dip to get into Tesla, and there never is one, Brian. What do you say to that?
Yeah, Tesla's just, it's a hard stock overall. So if I'm ever looking at anything to do with Tesla, I'm going to pick my strategies, my option strategies wisely. I'm going to be always selling some premium, always having some type of hedge in case that underlying stock goes the opposite direction, because there's really no rhyme or reason exactly why the stock is doing what it's doing. Is it a car company? Is it a tech stock? Is it a battery company overall? Is it a solar company? Because there's just such such a big spectrum that this company, that investors are just trying to figure out overall. So keep waiting for the dip. If the dip doesn't come, then sometimes you just let the opportunity go away and you go back and you find a different stock to trade in. Sometimes that's just the best thing to do, and you just have to move on. And you have to do yourself a favor and stop getting quotes on it. That's the way I kind of look at it, and find another underlying that has some upside potential overall. But if there's ever, well, I guess we can't really say that, but Lindsay made a lot of good points about stocks going into the S&P 500 index, and that's why we're talking about this trade today overall.
Yeah, and options are a good way to play it if you don't have a definitive answer of which directions stock is going to go. So that's what we do here every week on Mondays at noon with you guys, to just look at different ways to use options in your portfolio and in trading. So that's what we're here for. Oh, it looks like we got a couple other comments here. Caesar says, happy holidays and thanks for all the good stuff you teach us. You're absolutely welcome. Mike.
Thank you, Caesar.
Mike 196 is back. Thanks for answering. Have you both looked at ARC much? They have been my primary focus for some time and something I look to keep in my portfolio for quite some time. Specifically ARKK and ARKG. I haven't looked at those recently. Have you, Brian?
No, I don't actually know the stock off the top of my head. So I guess I wouldn't have any comments on it overall.
Yeah, sorry, we can't comment on that one, but it's been great chatting with you today, Mike. We wish you and all of our viewers a really happy holiday season. Hopefully you get some time off to relax, maybe Zoom with some of your family members, Zoom, FaceTime, whatever you have. And we wish everyone a peaceful, joyous holiday season and on to bigger and better things in 2021. Right, Brian?
Oh, definitely. And so don't forget to click subscribe and ring the bell. The next one is going to be, I think it's January 4th. Is that the right date? I don't have it right in front of me, but It's going to be that first Monday in January. So make sure you do click subscribe and ring the bell so you get all the alerts for the next stock play of the day.
Yep, there'll be no overtime this week or next week either. So we'll see you in the new year, January 4th, noon. We'll be back with stock play of the day.
Thanks for coming, everyone.